And Congress has already announced plans to crack down on derivatives regulation, but Commodity Futures Trading Commission Chairman Gary Gensler says they may not go far enough. He joins our Lizzie O'Leary now on Capitol Hill, where he just testified to the House panel writing new derivatives regulation. Lizzie?
Thanks, Julie. Well, one of the things that was a real topic of conversation in this hearing, and Chairman Gensler is going to talk about it, was a question of there's an exception here for end users, firms that use very specific derivatives to hedge their risk. So I want to ask you about this because you all sent pretty specific guidance to Capitol Hill about what you want. You want derivatives, standardized derivatives, cleared and traded on an exchange, cleared through central counterparties. But then we got this exception. What happened in between the articulation of those rules and the draft bill we've seen?
Well, I think that corporations should be allowed to properly use derivatives to hedge their risk, and we and the administration support that. But we want to make sure that if they enter into standard contracts that can be cleared, that their Wall Street firms, the intermediaries, still bring that to the clearinghouse, and the end user gets to hedge their risk. They're concerned who posts the margin. We think the Wall Street firm can post the margin and have individual credit arrangements with the end users.
But just about everybody I've talked to looking at these proposals says, oh, wait a minute, you've just created an incentive for Wall Street banks to write even more specific, even more opaque contracts to skirt the reporting requirements.
There is a concern about that. We do think that customized derivatives should still be allowed, but the Wall Street firms would be regulated. They'd have to have capital, there'd have to be business conduct, and of course record keeping and reporting to the regulators. We'd aggregate that information for the public.
They made a lot of money on the spreads between the bid and the ask in these very opaque markets. Were they gaming the system in that way?
Well, I think it's natural that Wall Street would not be enthusiastic about these proposals. This is a multi-billion-dollar business and multi-billion dollars of compensation as well. And what we're trying to do is protect the American public, and that's to lower the risk through centralized clearing and increase transparency, saying all of the standard products should be on some exchanges or exchange trading venues.
But you and Henry Hu from the SEC were pretty frank in this discussion before, Chairman Frank, not to pun too much, that this proposal doesn't go far enough. Is it going to change, do you think, before it's passed into law?
Well, we look forward to working with this committee and its staff, with the agriculture committees and the Senate, in making sure that we cover the whole market without exception. And we're very optimistic that we're going to be able to do that.
That sounds like regulator speak for the whole market isn't covered yet.
Well, I would say this. We highlighted areas of concern, and we're going to be working even later today and over the next several days with committee staff, and we're very encouraged that we have a good, open working relationship with Chairman Frank and his whole committee.
I would be remiss if I didn't notice that a lot of the pushback against these rules came from manufacturing companies, manufacturing states, Rust Belt, Farm Belt. You are overseen by the Agriculture Committee. How much of a factor does politics and local politics play here?
Well, Congress is going to deliberate and take all of our advice, but ultimately they'll decide what should be regulated. We do believe we need to lower risk for the end users and in all of America, and the best way to do that is to allow custom product, but the standard product to come into these clearinghouses.
You are set on October 15th to release this report sort of about the harmonization between your agency and the SEC. Will we get some recommendations in that report about where these rules should go to be more efficient?
Well, the president called for the SEC and CFTC to issue a report on how to come closer in our regulatory oversight. And this is of the futures and securities markets as well as the swaps market. So it's a little broader, but yes, there will be recommendations.
All right, Chairman Gensler, thank you very much. Julie, I know we're out of time, so I'm going to send it back up to you in New York.